Hey everybody, this is Jose here. We are about to start with the session. Please go ahead and give me a confirmation with a quick message on the chat box so I know you hear my voice, and we'll be ready to get started. Very nice, perfect. So we just reached the starting time for the session. Let me get the introduction slide ready, and that way we can begin. Very good. Very good, everybody. Well, first of all, happy Deepawali for everybody who celebrates the Indian festivities. Big celebrations here in Southeast Asia. So you may hear at times firecrackers blowing in the sky at times because obviously they tend to make it quite noisy. Okay, so anyway, so putting that on the side, we are ready to get started. Today is October 27, 2019. My name is Jose Blasco. I will be your guide. And today we are getting together for sharpening purposes. So we'll be looking into important concepts, tools, techniques, items, questions, answers, etc. that have to do with trading, the proper use of the apps, the proper application of the methodologies, etc., etc. Okay, but before we start, disclaimer: the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. So user, you understand and agree that hypothetical results obtained through demonstration do not indicate in any way the results you may receive on using our products. Perfect. Got it. We have it. We are done with the introduction. So we are now beginning our session again for sharpening purposes. Okay, so today I would like to bring back a well-known friend, which is our flowchart. Okay, and you know, as you look at it, Ahmad, how are you, my friend? Good to see you. So as you look at it, you know, I'm pretty sure you realize that there are a few changes on the flowchart. Okay, so today I would like to go ahead and talk about flowchart version 2. Okay, just to name it something, which is kind of like the product of having you guys utilize the flowchart that we have been utilizing up to this point, and you guys coming back to us with questions, concerns, experiences, etc., etc. And basically this motivated for us to produce a little bit of a simplified version of the flowchart. There are no major differences, but at the same time, the few differences that we're going to talk about today may actually make a difference. Okay, so again, let me explain this much better. Okay, so some time ago, we went over a specific flowchart to be utilized with AutoUFOs and AutoClimate as a process on how to trade. Of course, as you all know, if you have been reading the user guides of both AutoUFOs and AutoClimate, those apps can be used by themselves. Those apps can be utilized, combined to any other trading methodology of whatever sort, and could work either as a main decision tool or just as a little bit of a enhancer of other methodologies, providing extra confirmation, extra validation, etc. Okay. Of course, when running this flowchart, you know, we are certainly relying heavily on the apps for all the trading process. Okay, and again, the reason why we're conducting this sharpening session today with the new version of the flowchart, it's because the prior version of the flowchart, even though in one hand it was clear, well, in the other hand, it has produced enough confusion, let me put it this way, for us to come up with a variation of what the flowchart was. Okay, and really, the reason for the confusion probably has a lot to do with less trading experience or less practice put in place, but at the same time, if you have certain level of confusion, so then of course you cannot practice because you're confused, so you get stuck. Okay, so in order to kind of unlock this problem, okay, so we came up with a little bit of a simpler version of the diagram. Okay, so at the top, okay, we start the same way we have always done, which is using the common time frame, and the first thing that we do is to check the climate. In the prior version of the diagram, there were two choices for the climate, confirm and non-confirm, and we had different rules to deal with a confirmed climate as well as a non-confirmed climate. Well, as I said, we had a collection of users of the apps that, they were getting confused. Or should I use confirmed climate? Should I ignore when the climate is not confirmed? How do I deal with it? How do I do it? And again, everything in life got pros and cons. Trading is not a business where we have a crystal ball and we can see the future. Trading is all about probabilities. Okay, so my recommendation at that time was, look, trading confirmed climates gives you greater probability. So what you have seen me do for, I would say, probably at least a couple of months now, is every single trade I have executed was a trade that had a confirmed climate. Okay, so this is something that you have seen me do. But because in the diagram you still had two choices, the confirmed and the non-confirmed climate, we had a collection of app users that were being confused with that, and basically they were not practicing enough, or they didn't know how to do it, or they would execute trades in different ways, and then of course you cannot produce real consistent results in this manner. Okay, so in order to simplify, and this is the first step of simplification, okay, what we have done is to go ahead and not give choices when it comes to climate. It's either the climate is confirmed or is not. If it's not confirmed, you go back to the common time frame until the climate is confirmed. And if the climate is confirmed, then you go for the next step, which is looking for the target. Okay, so that's the first change for the ones of you that you have been utilizing the diagram, the flowchart for a while. This is the first change that you need to be aware of. Okay. Second change that you need to be aware of is the fact that to define the target, okay, what we used to do is that we used to work with 3 time frames, isn't it? So we were using the common time frame, then we were using the next common time frame, and then we were using the edge time frame too, right? And again, this concept of next common time frame has been confusing for many of you, okay? And I'm saying this out of emails received. And therefore, when looking at it, we have decided to do everything with one time frame, okay? So both climate and target identification will now be done with a common time frame only, without having to switch to the next common time frame. Now, let me explain why we opened the door to do this and what are the pros and the cons of doing this, okay? Because if you were to continue utilizing the next common time frame, certainly you are not doing anything wrong. Actually, it's probably more advantageous, okay? But again, since it has created confusion, one way to simplify it is not to switch time frame and just work everything on the common time frame. And it's fine, okay? It's certainly fine, because the other thing that many of you have said, which I have commented on that many times in the sessions, but something that some of you have said in emails and so on, is that you have been practicing the methodology for a while, and reaching that final target has not happened that often. Okay, and that, by the way, it's what should happen. When you set a target which is quite far, the further away the target is, the less likely you will get there. Okay, this is, I would say, common sense, and beyond common sense is statistics. Because if you are looking at auto climate, and let's say you have a climate which is supposed to last, let's say, 9 candles, and when you enter, you are entering and it's already candle number 6. So obviously, the probability of you reaching the very final target is less. Okay, so many of you have been putting time and effort, and well done, by the way. And as you have been practicing the methodologies, you have realized that many times you never reach that final target. You found yourself trailing stop and doing some trade management applications, and then you exited the trade somewhere in the middle of the move, okay, with an okay profit, but that final target has never been met. So again, let's talk about it, because this is a very subtle and important conversation to have. as I said, the further away your target is, the less likely you will meet that target. Okay, so when a target is very far, even though it puts a smile on our face in the sense of the amount of money that theoretically we can make, the reality is that the further away that target is, the less likely it is that we're going to make that money, right? So shooting for very far targets has the advantage that when that happens, it really helps the account to grow. And again, it's certainly a good practice to shoot for further targets as long as they are part of the plan and part of the rules. Okay, never make up targets. Okay, but in the other hand, apart from the confusion I was mentioning earlier, where it seems that some of you were getting confused with, so do I use the next common time from now, or is not yet, or so it seems that there have been some confusion. What really concerned me the most, and which is the real reason why I made this change, is that I was feeling out of some of those emails that some of you were getting a little frustrated. It's like, okay, I keep having these good trades, I reach my safety target, then I'll try stop, and then I'm out, but I never reach my target. And so why is this concerning for me when I feel that some frustration is being developed? Well, it's concerning to me because the moment that you trigger some emotion, you may open up for a cascade of effects and many other emotions to show up. Like, for example, you got frustrated because you didn't reach your target 3 times in a row, and next thing you know, now you just go double the position size to make that amount of money with a shorter move. Or next thing you know, now you decide to break the rules, and instead of set the target the way you used to set the target, now you're gonna make up a different way on how to set the target just so you reach the target more often because you've been frustrated before. And again, you start basically breaking rules, making up rules, allowing emotions to enter into your planning process, which should never be allowed. And that's the origin of my concern. Okay, so what do we gain if we plan the final target in the same common time frame as that we use when we assess climate? What do we gain? Well, what we gain is that in most cases we're going to have a closer target. So you will meet the target a little more often, and therefore it will alleviate that natural frustration that may happen in earlier stages of trading when you are more experienced. That doesn't even bother you anymore, but in earlier stages it could. Okay, and this is where emotions are in the most fragile state. Okay, because since we have no experience, there is a lot of uncertainty, and when there is a lot of uncertainty, it's very easy to be impacted by emotions. When you have a lot of experience, okay, you have much more certainty of what you do, and therefore emotions, you just don't care, okay? So that's why, again, I'm repeating myself here, but that's why it created a little bit of a concern on my side when I started noticing multiple emails with the same type of feedback, okay? So reason number one, and outcome number one of using the same time frame for climate and target is that we are gonna have nearer targets, and it's gonna give you a similar result than having a further target and then trail stop. It's gonna be similar. It's not gonna be majorly different. I know this out of experience, so it's fine. But also, it's gonna simplify the assessment process, where now we don't need to use this next common time frame. We can do everything with one time frame, and therefore it would also remove confusion from the prior step, as I said before. Okay, so in other words, subtle and very minor change, but at the same time the implications are important, and hence the amount of time I am spending to explain the reason for this. Again, minor change that in some cases is going to feel like a big change to some of you. Okay, so hopefully this will help you to overcome those. Okay, so I have a few comments on the chat box. I'll take those comments, and then I will continue and resummarize everything. Okay, so we have Ahmad. The market is different than before. In the old days, we did reach the final target. Well, yeah, the market is different than before. At the same time, no unfilled orders. The market will not move. If you do have unfilled orders, then the market would move. So what has changed massively throughout these last decades is that computers are now governing this business. Okay, so trading technology, using trading apps, everything that we do makes a lot of sense. It's actually the way to go without approaching trading with the proper technology. I mean, I don't mean to sound too tough, but a trader will stand no chance. Okay, you cannot compete against computers by drawing lines on the chart manually. Let's not be romantic to that level. Okay, it doesn't make sense. Okay, it's like, but again, I don't think I need to go for analogies. You get my point. But at the same time, the nature of the markets in the end is what it is. It's orders coming in and orders coming out, some orders to buy, some orders to sell, with different quantities and different prices. This is what drives prices, okay? And the reason why in the very old times you could see targets reach a little more often, which I agree, it's because the orders that were being injected or removed by human beings, and the speed of action was much less. So for example, if an institution, a large market player, decided to sell at 75, and suddenly they change their mind and now they don't want to sell at 75, they want to sell at 78, so they would cancel their orders and they would not sell until 78. And that would open the door for the market to rally from 75 to 78 because no one is selling until 78. Okay. Nowadays, you always have pockets of buying and selling all over the place because computers are doing that. So those large institutions basically are breaking their immense, intense buying and selling. They are breaking that into millions of little pieces. Because computers are trading all of that in different timeframes, okay, for different purposes, and therefore you got more movements in all sorts of directions, okay? In any case, again, while you are trading in the right climate, okay, you are supposed to reach your targets, okay? Because you are in the right climate. So if a climate is likely to last 8 candles and you enter candle number 1, candle number 2, so you still got 6, 7 candles to move your way, and that should bring you pretty far, and therefore you are likely or more likely to reach a target. If you enter in the climate later on, then you are less likely to meet your target, right? And that's the other reason why setting target on the same time frame that what we assess climate will also increase the probability of you reaching your targets, because in most cases not only they will be nearer, but in most cases you will also have a greater level of control over where are you relative to where the target is, okay? And you'll have a little bit more control. Again, having said all of that, okay, because some of you are quite advanced here in the group, so this is an advanced comment what I'm about to make, so you also know that climates tend to propagate. So when you see a climate that begins in, let's say, the 15-minute time frame, that climate propagates into the 60 and then into the 4-hour time frame and then into the daily. And sometimes that's why you see climates in the 15-minute time frame, that was the first one I mentioned, that you were expecting 8 candles, but next thing you know, that climate took 12, 15, sometimes 20 candles, like double of what you expected. Okay, why is that? Well, because the climate propagated into a next time frame, and in the next time frame, it may behave normally, but it kind of created a propagation effect or a stretching effect in the prior time frame. Okay, so again, our job as traders is to minimize the amount of money we lose when we lose and maximize the amount of money we make when we profit. Therefore, exposing ourselves to a potential climate propagation from a lower time frame to a higher time frame, it's actually very smart, because then you reach those targets, that make your trade to be a 10 to 1, a 5 to 1, a 8 to 1, a 12 to 1, and that really helps create stability in your accounts. Then you take 1, 2, 3, 5 losses in a row and it doesn't matter. But again, those happen less often, because as we said at the beginning of today, the further away your target is, the less likely you will get there. Okay, and now coming back to Ahmad's comment, of course, on top of that, you have computers trading in all directions, in all time frames. So obviously, there are more bumps along the way that they used to be in the, let's say, the 60s or the 70s, for example. Okay. So anyway, long explanation here, even though it's an important conversation to have for all of you. Okay. In any case, I'm gonna re-summarize everything in a minute, because for the guys that you have been part of the sharpening sessions for a while, Probably this is an interesting conversation for you because it's quite advanced. For the ones of you that are newer to the process, okay, well, my goal with simplifying the flowchart is to remove confusion, and adding so much information as I am doing today may actually confuse you more. Okay, so I am going to explain everything with a lot of detail. Okay, and then I will pause, rewind, start again, and give you a simple explanation so everybody understands. Okay, and that way everything will be clear and everybody will be happy. The ones that you have a lot of time, you have spent a lot of time practicing the methodology, and for the ones that you are just coming on board in recent times. Okay, cool. Okay, so here we go. Bojan, how are you, my friend? Hello, it worked. Yes. France, hi, the climate we look for confirmation is the current ongoing candle or the candle before. It's the current. It's the current candle, okay? Okay, so anyway, after I explain everything about the flowchart, we'll go ahead and plan, 1, 2, 3 trades, whatever, just as a practice, okay, to re-clarify everything, okay? So, pause, actually I should say stop, rewind, and start again. So today, my friends, we are going over version 2 of the flowchart. As we all know, trading is not a science such as is black or white, but trading, even though there is some science behind it, just like medicine, for example, there is science behind it. Well, there are different ways to take care of certain situations, okay? So in other words, there are multiple ways on how to trade, on how to put together a methodology. Like the same methodology, you change the time frames, and you could say, oh, it's a different methodology, and the only thing you did is change the time frames, okay? Or the same methodology, you change the way on how you position size, and then it's a different methodology. Or you take a methodology like what we have, and now you add Fibonacci's, for example, and now you made another methodology. And it's all valid, it's all good, as long as you have rules, and they make sense, and they give you an edge, and you follow them with discipline, okay? So there is no right or wrong in trading. This is something that we all need to know. What there is in trading is pros and cons and consequences of every decision and every rule we have, okay? So, having said all of that, we have been exploiting for a while a methodology that works quite well, but we have been receiving emails in a regular basis from you guys as users of the apps with questions, etc. And of course, we listen to you carefully, and what we have noticed is that the way the rules were set, which made a lot of sense, would also create some confusion among some traders. So we came up with a new version of the flowchart in order to remove confusion while we still keep an edge in our favor, okay? We still keep the odds, and we still have a process that makes a lot of sense. So the first thing that you may notice that has changed in the upper part is that now, with the common time frame, we're gonna be doing two things, which is to check the climate and to check the target, all with the same common time frame. Side note one more time, for target, we used to use the next common time frame. We will not do that, okay? I mean, you could still continue doing that, and it will be absolutely fine. But starting from now on in the sessions, I will not do it because it has produced confusion. And based on my prior explanation, which I will not repeat now, I gave you reasons why it makes sense to make this change, okay? Where it also makes sense to keep doing what you're doing if you're used to it and it works well for you and so on. Just don't change it, okay? I will actually add one more thing, okay? In my own trades, actually, I actually mix the two things. Like when setting targets, okay? I look at the common time frame and the next common time frame. I look at both. Okay, so in my case, I do 2 extra steps, okay, which you don't have to do. Actually, today I'm removing those 2 extra steps. But if you want to do it and you are more advanced and you follow what I'm saying and you want to do it, so in my own trading, I looked at the common time frame and the next common time frame, and whichever target is the nearest, that's my target. Okay. Again, this is to increase my probability of reaching target while respecting the market information given to me by AutoUFOs in the form of on-field orders. Okay. Anyway, so we're gonna be using only the common time frame because everything I said before. Okay. From there, we will move into planning the entry, where here there is absolutely no change. We will be combining the common time frame and the edge time frame. Okay, those two time frames will be combined because with the common time frame, as you know, we use the EMA, and then with the edge time frame, we use AutoUFO, and we are looking for UFOs that are enveloping the EMA. And when we find that, we got a valid entry, and then we continue. If we don't find that, then the entry is not valid, and then we just need to wait for new UFOs to form or for the restart of a new candle in the common time frame, and therefore we go back all the way to the top and we start again from scratch. Okay, good. So no change in the middle part, as well as no change in the bottom part. When setting the stop, we are looking at the extreme location of our UFOs, and we set the stop in the white space on the chart using the edge time frame. Okay, so no change. In other words, the only change up to this point is on the top part, where the only change is to not to use the next common time frame any longer for simplicity purposes. Okay, simplicity purposes where we are not giving up much. Okay, so we simplify and we still keep the process very well aligned with what we should be doing. Okay, if because of simplifying the process you end up with an incomplete process, then of course you should never do that. Okay, and I would never lead you to do that. Okay, but by simplifying it this way, we are still keeping the process complete and reasonably high probability. So that's the way we're gonna do starting from now on. Okay. Okay, more comments. Let me read your comments and I'll keep working on the flowchart, guys. Okay, so Thomas, thank you. I'm new UFOs. Very good. So this certainly will help you, Thomas. Again, you know, we're just collecting your feedback, all coming from all of you, and we are just learning from you guys. Okay, because obviously trading and technology, we have that under control, but listening to you is something that we have been doing for a few months, and therefore we are still in learning stages, in the sense of learning from you, in the sense of learning what your needs are. Okay. Good. Thui, is it incorrect to set targets in both timeframes? No, is it not incorrect, Thui? And I don't know if you were with us already when I said what I said before, but I'm gonna repeat it just in case. What I said is that in my own trading, when I set targets, okay, I like to check the common time frame and the next common time frame both, and then I will pick whichever target is the nearest. That's how I do it for myself. Okay. So normally, and by the way, it's not always, but normally you would find nearer targets with a common time frame, and you would find further away targets with the next common time frame. Normally, not always. So what I like to do the best is look at both the common and the next common time frame and pick the nearer target. Okay, this is how you maximize the probability of hitting that target. Okay, but again, because in most of the cases, the common time frame, not the next common time frame, but the common time frame without next, okay, that one will give you the nearer targets. So by doing it this way, you increase your probability to meeting that target. Okay, and this should help you as well as removing that confusion I was talking about. Okay. So I believe, Thuya, I answered your question. I'd love if you could confirm that what I answered is what you were asking for. Okay. Bojan, this could also be taken on with a set of rules such as same common time frame T1 and T2 higher common time frame T3. Yes, you can also do that, Bojan, but if you don't mind me to say, now, again, the purpose of today's conversation is to simplify. So now we are adding too much and is the opposite of simplify. But the worst part is not to making the process more complex, because, you know, as long as you have practiced for long enough, a complex process will feel simple to you. Okay? If you never practice the process, even a simpler process may feel complex. Okay, but once you have practiced enough, a very complicated methodology may feel a piece of cake to you because you have practiced enough. Okay, so my biggest issue with what you said, Bojan, is not the complexity you add, which could be a problem, but it's not a big issue. My biggest issue is that the more targets you use, okay, the more you hurt the reward to risk ratio of the trade. Okay, and here I want to share something personal from when I started learning how to trade myself. That was close to 12 years now. And I am a perfectionist, okay? I'm still are, but much less now. Trading has taught me a lot that, being pragmatic is much better than being perfectionist, okay? But anyway, at the time when I started learning how to trade, I was using a lot of my engineering brain to begin learning how to trade, and therefore I was looking for perfection, like real perfection. And I remember planning trades with minimum 3 targets, sometimes 5 targets, because my plan was to catch every single bit of a move, beginning to the end as much as possible. And you know what? Sometimes, you would catch these amazing moves. But then you realize that even though the move was so long and so beautiful to see on the chart, the profit collected would have been the same as closing the trade when you got to target 2 with the whole size. In other words, the more you scale out, the more you build up your pride, but the less you help your account. Okay? So in the process, we got a final target and a safety target. We are dealing with 2 targets. The safety target is not even a target for you to collect a significant profit. The safety target is to remove risk and to allow you to run multiple trades in parallel. That's the purpose of the safety target. So therefore, we are going for 1 target, even though technically we have 2. The purpose of maximizing the profit is put in the final target. That's where the purpose is. Okay, and therefore, if you were to start using T1, T2, T3, T4, so yeah, I mean, again, sometimes you could report and document a trade that you're like, oh my God, what a beautiful trade. This is the trade of the quarter. But then when you look at how much money you made, it would be disappointing. Okay, so keeping it simple, guys, it's always a smart way to approach things in life, including trading, of course. Okay, of course, trading is not simple. Okay, who tells you that trading is simple? It's an incomplete statement. Okay, I mean, it's a very, very important competition that we're doing here against computers that belong to people such as Goldman Sachs and Citibank. So hey, it cannot be that simple. This is serious stuff. Is that making sense? But at the same time, the process that we run should be as simple as possible, because apart from the old saying that simple works, if you wish, keep it simple, stupid, the keys principle, apart from all those old principles, there are 2 pragmatic things that are important for you to keep in mind, which are the key advantages of simplicity. Number 1, if your trading methodology is simple, looking for trades and planning trades takes no time. So you find many trades every day, so you don't get frustrated, and you have an easy time and a smile on your face when you trade, which allows you to have your emotions under control. Where if it was so tough to find a trade and your process was so complex and you need to do million calculations to find a trade, so next thing you know, you would be sweating, you would be unhappy, you would take a while to find trades, you would probably find excuses not to trade because trading is a pain, right? And you would be like, oh, I don't want to trade today. I want to rest, right? So one of the reasons to keep it very simple as well is so it's fun, okay? It's fun. It doesn't take much of your energy. The other reason, which is key, is because if your methodology is simple, the probability of making mistakes while you apply the methodology is less. If your methodology is very complex, you will make mistakes, even if you are focused, even if you are concentrated, even if you have practiced for a while, even if you're a smart person, you will still make mistakes. I mean, we make mistakes even when it's simple because we're human. Imagine if your process on how to trade was super complicated. Now you are guaranteed too many mistakes. Okay, so keeping it simple is a good thing. Okay, and that's what I'm shooting for. In everything that I expose you to, guys, in the sessions. Okay, obviously as well. Always humble approach to everything we do in life. I'm learning from you guys. Okay, and one of the things I learned in recent times is that even though the prior process, to be honest, was also simple, and to some of you is very simple because you have practiced for long enough, it has been proven to me, just by reading your comments and listening carefully, that it was creating certain level of confusion, and therefore I had to squeeze my mind a little more to try to find extra simplicity within the process, which is what I'm presenting to you today, guys. Okay, so again, very long explanation today to say something very, very simple, but I want to make sure you guys understand why we're doing what we're doing. We have talked about the importance of understanding why we do what we do as traders. We have talked about many things in these sessions about the importance of the C word, isn't it? Okay. Hey, I cannot avoid the temptation. I have to quiz you here, guys. What is the C word? Please go ahead, type the C word on the chat box. You will make me so happy, guys. What is the C word? Come on, guys, give me that C word. I know there is a little delay with the YouTube broadcast. Confidence. Thank you so much, guys. I love it so much. I love you so much, guys. So, it's key, okay? And being adults, okay? You cannot be confident, okay? Unless you understand the reasons why we do what we do. So that's why when we do sharpening, guys, really, sometimes I repeat myself 5 times. Some of you may be smiling because maybe I repeat myself 10 times. But again, my intention here really is that it clicks to a level where you fully understand the reasons why we do what we do. So it helps you build that confidence. Then you add the practice and that's it. Okay? You add the practice and that's it. Okay? That's how it works. So anyway, a few more comments here. Yeah, Thomas, can you show a few examples? Absolutely, okay? I'm gonna go over the diagram now and then we're gonna go over examples and I will be back and forth between the chart and the diagram, chart and diagram to explain the whole process with all detail, okay? So we'll do that today. Ahmad, also when we look to the higher time frames, we see the big picture. Yes, I agree. I'm not sure exactly, what I was saying when you added that comment. Certainly, it's a very well said statement there. Okay, Bojan. Yeah, I guess I got you thinking with your yeah, I mean, you know what? You are a very detailed person as well. And I know you have been working very hard on simplifying the way you log. So I don't want to overcomplicate it for you, okay? But maybe something you want to also incorporate in the way on how you log is a way to log what if scenarios. Okay, so what if I only use 1 target? What if I use 2 targets? What if I use 3 targets? And then after 30-50 trades, go take a look at the results. And I am telling you, Bojan, I mean it could be that there is a specific market condition for the next month or 2 or something, and multiple targets work better. But through time, I am telling you, few targets will give you better results than many targets. Okay, so that's. But again, don't take my word for it. Okay, because again, to build the confidence in it, you have to see it by yourself. So maybe you want to add these what if scenarios in your logging. Okay. Bojan, you really like the simplification and the use of the climate. Yep. Confidence. Okay. Yeah, Ahmad, Jose, you made trading mechanical easy to decide. Great, thank you so much, guys. I mean, that's the plan, okay? That's the plan. We are human, but when trading, we are not, okay? We are little machines, or if any, we are alien, okay? Hence the UFOs. But certainly, that's the time in life where we don't want to be human. No emotions, all mechanical, all quantifiable. It's all black or white. That's it, okay? Anyway, so then next step, we quantify risk and size, no changes. We define the safety target, no changes. We use the reactive time frame as an option, no changes. We execute the trade, no changes. Field or no field, no changes. And then when we get into trade management, we have one more rule for trade management, which is a climate change. Okay, which is a climate change. So again, sometimes we end up with targets which are very far away. And especially, you have heard me say that many times when we do intraday sessions, isn't it? That sometimes we have a target which is so far away that I will say things such as, there's no way we're going to reach the target today in the intraday session. And again, I also say that you should never say no way because you don't want to bias yourself. But again, between us, sometimes I do say that, right? So, the reason why it's important when we do intraday trading is that because, especially in markets such as futures, if you surpass 5 p.m. Eastern time, then you have a 1 hour close in most of the futures markets, right? And then you got margin, you have overnight margin applied to your account instead of intraday margin, which may be the reason for a margin call unless you had more funds in your account. And, to avoid that problem, one of the rules that we have for intraday trading is to always close the trade before the end of the day. Now, if your target is very far away, well, again, I'm going to say one more time, there's no way you're going to get there in an intraday session, okay? So now, what may happen, what should happen, what tends to happen multiple times in an intraday session is multiple climate, I'm just using the wrong drawing tool here. It's multiple climate changes, okay? This is something that happens very, very often, right? So if you're using the 15-minute time frame intraday, and right here is your entry, this blue dot is your entry, and let's say your target is gonna be all the way there, okay? And this is one of those targets which is so far that, as I just said, there's no way we're gonna get there in a one day, okay? Well, even if you were to get there in a one day, the market will go something like that. It will not be one move, okay? And what you will notice is that in most market movements, you have impulse, correction, impulse, correction, impulse, correction, impulse, and then for a while you will have the opposite: impulse, correction, impulse, correction, impulse, and then it will go back again and finally get to your target. So in other words, if you had a case like this, okay, that was an up climate for a while, then it was a down climate for a while, and then it was another up climate for a while. So the rule where we added, which is to exit based on a climate change, would have you exit somewhere around this area, okay? Somewhere around this area, which is when the climate begins changing, auto climate will pick it up, and somewhere in here you would be exiting the trade. Not for the maximum profit, which again we said that you were not going to reach it in an intraday move in that example, right? So you were not going to get there anywhere, right? Anyway, and at least you had maximized the profits the most as possible, okay? Because if you were to hold and hold and hold, what happens many times is that then the market is about to close and you end up closing the trade somewhere here. So in order to try to maximize the profits as much as possible, again, one more rule, which is to exit if you were to have a climate change, okay? Just get out, and that's it, okay? If the climate change, by the way, so let me draw this again. So this is your entry, the blue dot above is on the top. If the climate change, okay, instead of happening the way I did, is something like that, and now you have a climate change, and then it goes back up, right? So if the climate change, instead of happening in this portion, okay, in that portion here, if the climate change was to happen very soon, okay, so this is the entry, this is the target, and the climate change was to happen very soon, okay, so what does that mean? Well, that basically means that you got stopped out. That's what it means. Okay, so if the climate change happens too soon, you will not need to close the trade based on a climate change because probably you are stopped out already. Okay, so this is for when the trades work well and the market starts pushing you away. Okay, but then there is some condition, such as the market is about to close for intraday traders, okay, or your target was really way too far away, which we had cases of markets making all-time high, making all-time low, and then you don't even have a target, isn't it? So in cases like that, using the climate change would also help you to maximize the profits to be collected, okay, readapt to the market, okay, and then plan trades in the opposite direction. Okay, that's it. Cool. Okay, so it seems everything is clear. Okay, so I think that what we should do now, okay, and we'll do this for, let's call it 20 to 30 minutes maximum, and then we'll call it a day. So what we're gonna do is we're gonna go ahead and load a collection of charts. Okay, we'll look at futures, we'll look at stocks, we'll look at Forex. So we'll do it for all the assets. And we'll plan one trade for each asset, and we will apply the process and the method so it's fully understood. So next week we will begin with this very subtle minor variation, okay, and everybody will be aware of it. Okay, so in here I got a TradeStation, so I would like to run my scanner looking for long opportunities. Okay, so I'm going to do that. In parallel, I will also open my short-term desktop. So I'll be looking at the futures markets. Okay, I will be looking at the futures markets. And in parallel too, I will also be turning on my web browser so I can load TradingView, so we can also be looking at Forex. Okay, so I'm doing a lot of loading on my computer right now as we speak. Okay, so here is trading view. Here we go. Okay, and here is TradeStation, which is loading. Actually, I gave a lot of work to do to TradeStation to load multiple workspaces at the same time at which we are running the scanner. Okay, so it's taking a little bit of time, but it should be ready in just a moment. Okay, good, perfect. So so let's begin. Okay, let's begin with futures, for example. Okay, let me close those workspaces that we don't need. So close workspace and right click, close workspace. Here we go. Okay, so the red screen is loading. We are about to have all the trades and we will be able to go for whichever it's a golden color. Okay, here we go. So it seems that with gold, okay, we have a confirmed climate, as you can see, near sensible short. With crude oil, also confirmed climate near sensible short. So they are both sensible, they are both confirmed. So way to go. S&P is gray color, so it's not confirmed. So we pass. Yen, it's also gray color, is not confirmed, so we pass. Linhox is confirmed, but it's hopeful instead of sensible, so we pass. Okay, so in the world of futures, okay, we are gonna deal with either gold or crude oil. Okay, so I will go ahead and load gold. Okay, and also in parallel. Okay, this is not part of the diagram because this is something that you just do. Okay, but I'm just gonna do it because it's important. So we also need to get into barchart.com. Okay, look at metals, look at gold, and make sure that I am using the right symbol, the right expiration symbol, which is the right letter for the symbol that I have loaded. Okay, so notice that Z is the right one, and you know this is super important to do. Z is also the right amount for crude oil, if you recall Friday session. Okay, and here you can double check here that the greatest liquidity 492.357 is found with the Z. Okay, so super important to use the right markets. Okay, again, this is not part of the flow chart because it's kind of, let's call it obvious, but at the same time it's important to keep in mind. Okay, so what do we have? So we have the Z, so we're good. The climate with gold is confirmed, 3 red dots. Okay, so we have the red dots, it's all good. The average, actually, by the way, talking about climate, okay, which is the beginning part. So using common time frame, confirm climate. Okay, the common time frame is the one below, 15 minutes in this case. So confirm climate, the climate is confirmed. Okay, so yes, you go for the final target. Okay, also in that process of confirming the climate, not only we look at the fact that the dot is thick, okay, it's also important to look at the stats. Okay, and we are dealing with 3 candles into a climate which is likely going to last 4, 395, let's call it 4. Okay, so in other words, we are still on time to short gold. Okay, now what else do we have? We have the average lining up at 1507.3. Okay, so we will need to be able to take this trade, we will need to find UFOs at that price. Okay, this one is 1507.9, which is higher than 0.3, so that one doesn't work. And this one here is 1508.3, which is certainly above that. And on the right, there is no red UFO. So in other words, gold gives us a theoretical opportunity, but when assessing AutoUFOs, then there is no opportunity. So I'm going to close gold. We forget about it. Why? Because when looking for the climate, actually, I did shortcut the process here, isn't it? My habit to speed up the process just to save time had me automatically go into the checking the valid entry. Okay, so let's redo it properly now because I went a little too fast there. So crude oil, this is what happens, isn't it? This is like driving. You're not supposed to look at the phone while you drive, but sometimes you know, they have these unconscious movement of your eye, and you end up reading that text message, isn't it? We should never do that, but we do, isn't it? So it's kind of what I just did now. So anyway, loading crude oil, we have the Z symbol, as you can see. So the symbol that we have is right. Okay, so let's apply the process, okay, religiously now without making any mistake. So what do we have? First, using the common time frame, check the climate. Okay, so common time frame is 15. Check the climate. Yes, the dot is thick. Okay, then we have one candle into the climate where that climate is likely going to last 551. Let's call it 6. So first candle out of 6, certainly a great time for you to enter this trade. Okay, so the next step would be using the same common time frame to look at the final target. So you would then activate AutoUFOs, okay? And it's always healthy to maximize that chart to get a better view, okay? And when I maximize that chart, I seem to have nothing above price, okay? And it's just because I need to load more data, because crude oil has not been at these levels for a long time. So I'm just adding many more candles, okay, for this to be loaded. So we'll be able to see the red UFO, okay? We are looking for rival UFOs for the target because we are planning on a long, okay? The climate was sapphire color blue. So we are planning on a long, so we are looking for the target to be the rival UFO, which is the ruby red. Okay, so loading more candles, okay, and as you can see, these allow us to, okay, almost there, calculating studies and strategies. Here we go, almost there. Yeah, there is a download process going on behind the scenes. Okay, so messages, download scheduler. Okay, TradeStation is thinking. Yeah, so I loaded 5,000 candles as you saw, so that's a lot. And TradeStation is taking its time. You may have also noticed that I am running TradeStation in a virtual machine. You can see here on the top TS10 on JB. So this is a Windows inside my Windows, just to separate processes. But also this has a penalty to pay, which is it makes my TradeStation to be a little slower than what it would be without the virtual machine. Okay, even though it's a neater way to run it, but it also makes it a little more slower. Okay. So yeah, so it's looking like TradeStation is just processing data, so we're just gonna have to wait. So I went too far, it was not a good idea. Okay, there is a UFO there, but again I cannot click on it yet because TradeStation is still working. Oh, okay. I still have the scanner running too. So yeah, so my TradeStation is really busy at this time. I should have not done that, guys. Okay, I'm running the scanner while I am loading 5,000 candles with AutoUFOs and AutoClimate all running together at the same time. So that was not a smart move, my friends. Sorry for that. It's gonna use a little bit of our time. Okay, so you know what? Let's go ahead and instead of waiting so long. Let's go ahead and look at Forex in the meantime. So let's apply the same process for Forex, okay? And then we'll go back to crude oil and hopefully everything will be ready there, okay? So how would you deal with Forex, okay? So in this case, okay, I'm gonna use the combination 240-21, okay? This is the one I'm gonna be using. Just to be clear, I believe this should be clear for everybody, but for the ones of you that are newer to the process, these are the timeframes that we use for Forex. So if you use 60, you combine 60 and 8. If you use 240, you combine 240 and 21. If you don't have access to special timeframes, okay, because you are using the basic plan with TradingView, then you do 60 and 5 and 240 and 15. Okay, so those are the timeframes that you use. when doing this. Of course, using Fib timeframes will give you an edge, but it's not imperative for you to use. You can also use the standard timeframes from the right. This is what you do when you do Forex for intraday trading. Okay, for sure, you can also do Forex or futures or stocks with larger timeframes, such as daily, weekly, and monthly for common, and therefore this would be combined with 55, 144, 377 if you use special timeframes, or it would be combined with 60 to 40 daily if you use standard timeframes instead of customized timeframes with Fib numbers. Okay, so that would be for the daily, weekly, and the monthly climate if you do longer term trading. But again, no matter what your style is, the process is the same. So let's pretend you are planning a trade on the Euro Japanese yen. Okay, so if you plan a trade on the Euro Japanese yen, the first thing is that you have to decide your common time frame. In this case, we have decided to use the 4-hour common time frame, isn't it? So we're using the 4-hour common time frame. And what do you do with that 4-hour common time frame? Well, you check the climate. Okay, so let's look at the climate and see if it's confirmed or not. Okay, and it's looking good because we have a thick dot, and the current dot is dot number 2 out of a climate that statistically would tend to last 5.34. Okay, so in other words, if you were to enter now, you still got multiple candles after your entry where the climate could propagate. Okay, so looking good. We do have a valid climate. So now that we have a valid climate, what else do we do? Well, we're gonna go ahead and define the final target. Okay, to define the final target, okay, we will maximize the chart, because apart from the climate below, the auto climate below, I need to turn on AutoUFOs. So I am turning on AutoUFOs, and this is telling me that my target should be that first rival UFO located at 120.27. Okay, so 120.27. Okay, 120.27. That would be the place where the target should be. Now, because it's Forex, we have an additional rule every time we buy. Every time we deal with buy orders, we need to add 2 pips. So 120.27 becomes 120.29. Okay, 120.29, that would be the location for the target. Okay, so now we know, and we just go back to everything where everything was, and that's it. Okay, so we continue with the flowchart now, where we had a confirmed climate, we have a proper target, and it's identified, and we define it as 120.29. Okay, so then we continue, and now we're gonna combine the common time frame with the edge time frame to look for an entry to see if we do or we don't have a valid entry, yes or no. To have a valid entry, the way we define a valid entry is an entry where a UFO found on the edge time frame would be enveloping the EMA found in the common time frame, which in this case is 240 and 21. So what do? We go back to TradingView. We look at the value of the EMA, which it's currently, as you can see, 120.59. You can also see the value right here. Okay, so 120.59. And now we move up to the edge time frame, because 240 is the common time frame, correct? So we got the EMA value from the common time frame, and we keep that number in mind, and we go see if we can find UFOs around that value. And we do have a UFO found at 120.57, right? And it goes from 57 all the way to 63. So certainly 59 is somewhere in the middle. In other words, we found a UFO that is enveloping the EMA. So it does qualify as a valid entry. Okay? So we found an entry. Okay? So we found an entry. So then we continue. And we continue going down to focus only on the H time frame now. So now we don't need to look at the 240-minute time frame anymore. We just focus on the 21 in this case. Okay, and what we're gonna do using that time frame is to define the stop. Okay, so the stop, obviously, if this is your UFO right here, okay, let me reload it. So if this is your UFO right here, 120.57 to 120.63.6. So if that is your UFO, okay, your stop needs to go on the other side of the UFO, and it has to be on the white space. So just a little beyond on the white space, that's where the stop needs to be. Okay, and if that was to be stocks or futures, that's exactly what it would go. But because it's Forex, you probably remember from our Forex sharpening session that we made a rule. And the rule is that every time that we deal with stops, we need to add 5 pips. So 120.64, okay, 64 is because I am taking 63.6. I'm rounding it up to 64 because the pip value, guys, in yen pairs is the second value, isn't it? So I am basically rounding it up, okay, to 64. In other currencies is the fourth decimal place, right? But in the yen pairs is the second. So 63, I make it 64. So I'm gonna take 64, and remember we need to add 5 pips, which is 0.05. So 64 and 5 is 69. That would be the location for the stop. Also, because it's a buy stop, because this is a short trade, isn't it? The climate being ruby color suggests it's time to be a seller, to short. So we're gonna enter at 57 short. So if we are wrong and it goes higher, we want to be stopped out at 69. And being stopped out at 69 means that we buy at 69. But what else did we say about buying? Every time we buy in the Forex market, we need to add 2 pips. Okay, this is just a reminder of what I said earlier and what we learned in the Forex session in the sharpening room. So if I add 2 more pips, that would make my stop to be 2071, right? And that should be the location. Okay, that should be the location. Now, what's the issue though? Well, 12071 would fall somewhere in the middle of the next UFO. In other words, those 2 UFOs are so near that the real way on how to deal with this would be to treat those 2 UFOs, the one below and the one above, like it's one, like it's a fat one. Okay? And to be honest, if you look closely, we also have the dark red UFO that is, as you can see, is overlapping with the pure red UFO. They are overlapping. So really, my stop not only needs to go above 120.84, my stop should go above 121.19.4. In other words, my entry zone would be all that thing so wide, so thick. And even though it would be correct from a concept point of view, as you probably remember from many sessions, we're not going to do that because especially given the fact that we calculated that your target is going to be 120.29, which 120.29, this is 35, right? So 29 is going to be like here. So if this is your entry and the vertical distance from entry to the blue line, okay, that vertical distance, okay, is your profit. Okay, so you are risking more vertical distance to the upside is your risk. You're risking more than the money you're gonna make, so that would be crazy to take this trade, okay, and we're not gonna do it. But in any case, I am anticipating what the next step would be in the diagram, which is quantify risk and define the size. To keep this simple, because again, today is a sharpening session, okay, I am going to pretend that the dark red UFO does not exist. So let's pretend the dark red UFO does not exist, and therefore the price for you to set the stop is 120.81, because remember, we ignore the last decimal place and we round up. So if 120.81 was your stop, so you would take 120.81, and then as we did before, you would add 5 pips because it's a stop, and you would add 2 pips because it's a buy order, and that would place your real location for the stop to be 120.88, which is somewhere here. So below would be your entry, above would be your stop, okay? And the vertical distance, that would be your risk, okay? So let's say that's the case, okay? So let's say that's the case. What else is next? You have the stop, you quantify the risk, okay? So how much is the risk? The risk is the distance between 120.88 and, oh, sorry for that. Here we go, that's what I wanted. So 120.88 minus 120.57, right? So how much is your risk? 31 pips. That's your risk, okay? That's your risk. And if you do the math, you're already realizing that it's not gonna work well, right? Because my target is gonna be located at 29, so it's not gonna work too well. But again, let's keep going, okay? Let's keep going. So how do you quantify the risk and define the size? Well, the very easiest way by far to do it is to use TradingView. So you would click on the order panel. Okay, I need to connect to broker. Okay, connect to paper trading, for example. Good, here we go. And now that I am connected, I'm gonna click on sell because this is a shorting opportunity. And here, I just need to, just like if I was to place the order, even though I'm not placing the order now, I'm just calculating my risk and the size. So you would type your entry, which is 120.57. You would type where the profit is, okay, which is 120.29. And you would type where the stop goes, which is 120.88. This is what we said, right? 120.88. 120.81 plus 5 plus 2, that's 120.88, correct. So now that you got 120.88 where the stop is, and you got 120.57 where the entry is, okay? Now that you got that, you just need to come where it says dollar risk and type how much you want to risk. So let's say your account is $5,000. And let's say you want to risk 1% of your account, which is 1% of 5,000 is 50. So if you want to risk 50, you just type 50. That's it. And the moment you type 50, okay? The moment you type 50, okay? Here, it will tell you the size of your trade, the units. So you need to go with a size which is 17,000 plus. Of course, round down. So 17,000, how much is that? Well, if a micro lot in Forex is 1,000, and you trade micro lots, so 17,000 divided 1,000, that is 17 micro lots. Let's say instead of trading micro lots, you trade mini lots, which is 10,000 each. So 17,000 divided by 10,000, which is a mini lot, that is 1.7 mini lots. You cannot do 1.7, so you have to do 1. Okay? And for sure, a full lot is 100K. Okay? Well, if you are only allowed to use 17,000, you certainly cannot do 0.17 lots. Okay? So you cannot trade lots. So you will go with 17 micros. If you use platforms such as MetaTrader, you would just type 0.17. Okay, and by typing 0.17, MetaTrader 4 would understand this is 17 microlots. Okay, and that's it. This is taking care of pip values, etc., etc. The same would happen if you do this with futures. This would take care of the point value, the tick value, everything would be taken care of for you. Okay. Okay. So what else? Define the safety target. Okay. Well, if my entry is 1.2057, and my risk, we calculated it was 31 pips. If I project 31 pips below entry, I'm not sure what I have done. Yeah, I think I was missing one digit. So 120.57 minus 0.31. Yeah, that's 120.26. Now, what's the problem? My target, based on what we said before, will be 120.29. My target is supposed to be beyond, right? The safety target, okay? But the safety target happens to be below my final target. In other words, my final target is too close. In other words, this trade is not valid, okay? If so, this trade would not be able to be executed, and you would find out this information when you get to the safety target, okay? And therefore you go back to the beginning and you apply the process to another currency pair. If out of practice, so please bear with me, let's ignore this UFO, let's ignore that UFO, let's ignore that UFO, okay? Let's pretend only the 5763 UFO exists, okay? So what would you do? Your entry, by the way, your stop would be 120.64 plus 5 plus 2, correct? So 120.71, that would be your stop, right? So you do the same process. So step 1, look at the climate, is confirmed. Second, look at the target. The target we said is, one more time, 120.29. That's what we said, okay? We looked at AutoUFOs in the 4-hour time frame, okay? It was here, right there, 120.29, because we add 2, isn't it? So that's where your target would be. What else? So now you look for the entry. The entry is that UFO right here. Again, let's pretend that the ones on the top don't exist, which are the ones that are messing us up. Okay, let's pretend they don't exist. So what would you do? You would then go for the next step, which is setting the stop. Okay, and the stop would be located at 120.71, which is 64 plus 5 for the stop, plus 2 for the buy order. That's 71. Okay, 120.71. Now, once you got that, what is next? Define the risk and the size. Okay, so how much is the risk? Well, 71 minus 120.57, you have 14 pips of risk. Okay, so you have 15 pips of risk. Okay, the entry is 57, the stop is 71. You want to risk $50 in this trade, assuming that's the case. So now you would be able to take this trade with 38 microlots. That would be the size for the trade, 38 microlots. So what would the trade plan be? Okay, well, you will need to define the safety target and you will be ready to execute the plan. So the safety target would be done, again, using the calculator. So you will take 120.57 and you will project below 14 pips, which is the risk we just calculated we have, which is the difference between 120.71 and 120.57, which is the stop and the entry. Okay, 14 pips. So if I project 14 pips below 57, which is the entry, that brings the safety target to be 43. So what is the final plan for the trade? Well, on the very top, we would have a stop loss, which is 120.71. Below, we have our short entry, thanks to the climate, which is 120.57. Below, we have the safety target, okay, which is 120.43, projecting 14 pips below the entry. And finally, we have a final target that we found thanks to applying AutoUFOs to the common time frame, which is 120.29. And this would be a valid trade given the fact that 29 is beyond 43. Okay, so you have the safety target applying prior to reaching the end point of the trade, which is 120.29. Yes, and Prag Habakara, you are right. The final target has been calculated using the 4-hour time frame instead of the daily time frame, okay? Which I am guessing that you joined the session with a little bit of delay because the beginning part was all about explaining the subtle few changes in the flow chart. So I would like to ask you please to watch the beginning of the session after the session is over and we post the recording, okay? Cool. So let me see comments out there. Yes. So yes, I just answered the question. Yes, we are shorting, so the target is below. Yes. Yeah, Ahmad, please confirm for me, please, that you are with me on the fact that yes, we are shorting, and yes, you understand the target was 120.29. Please confirm that for me. And in the meantime, I will assume now that we are fine with Forex. We have our scanner that finished looking for stock opportunities. We should have, wow, I loaded. Okay, here we go. So here is where the AutoUFOs on crude oil are, okay? So we just did an example of applying the flowchart to Forex. Now let's do it for futures intraday, okay? So step one, check the climate on the common time frame. Common time frame is 15, okay? What do we have? Thick sapphire color dot. Climate is confirmed. One candle out of 5.65, let's call it 6. So we are indeed at the beginning of a climate. It would be lovely to find a good entry. This is looking good to go long. So step two, okay? Look for the final target, okay? Look for the final target. So how do we do that? We activate AutoUFO to the same 15-minute time frame. Same common time frame to look for the target, okay? This is a change from today. Make sure you understand that. So final target for crude oil, very far away. This is one of those cases where I tell you, you know what I'm about to tell you, right? No way we get there in a day move, right? I mean, and sometimes the market is so impressive that it surprises us. But in a normal case, you know, really, this is way too far to be reached in one day, even if we have a very, very explosive move, okay? So normally that would be for a multiple day trade, okay? And therefore trade management rules will apply here, okay? So 58.46, that is the target that we're gonna keep in mind, okay? 58.46. So what am I gonna do? Disable AutoUFOs. I don't need that any longer, okay? Go back to the normal scaling. Here we go. So we have a proper view of the common time frame in my bottom left. Good. And now what? Well, now we need to go for we need to continue the flowchart and combine common time frames and edge time frame looking for a valid entry. Well, bad news. The common time frame has an EMA located at 56.61, which is around here, and here there is no green UFO. 56.61 around here, no green UFO. 1561 around here, no green UFO. So we don't have a trade, okay? And therefore, based on the flowchart, no valid entry, wait for a new UFO to form. So again, for the sake of practice, let's pretend that we waited, okay? And after 10 minutes, 12 minutes, 15 minutes, whatever, now a UFO showed up here, okay? A UFO just showed up, okay? Amazing, beautiful artistic skill that I have here, okay? We had a beautiful UFO that just formed here. Let's pretend instead of blue is green, okay? And let's pretend the top part of this UFO happens to be 56.63, and let's pretend that the bottom part happens to be 56.55. Let's say that's the case. If that was the case, you have the average 60.61, which is certainly enveloped, okay, enveloped by 56.61 and 56.55, okay? The EMA is in the middle. So if that was to be the case, okay, and again, we got 56.63 to 56.55, okay? So what would we conclude? We will conclude that we do have a valid entry, and therefore we go for the next step, which is to define the stop loss. So when defining the stop loss, so what do we do? Okay, again, I erased my UFO, so let's draw it again. So let's say my UFO is here, okay? Somewhere around here is my UFO, and as we said, the bottom part, the extreme, is 56.55. So what would I do? I would need my stop to be right below. And this is not Forex, okay? Crude oil, like stocks, like options, are centralized. They trade in an exchange. So we don't need to add wiggle room. We don't need to add extra breathing space because different brokers got different prices. In this case, we don't have different brokers having different prices. All brokers get the pricing from the exchange. It's a centralized product. So we are just gonna go one tick below. In crude oil, and you can see that very easily here on the matrix. So it goes from 62 to 61 to 60 to 59. So the minimum price movement is 001. Okay, is what is known as one tick in futures, which in this case is 001. In other words, the stop is gonna be 56.54. Okay, 56.54. So even though we are dealing with crude oil, and normally I don't use trading view when dealing with futures, I simply go ahead and use TradeStation. You know what? You could certainly use crude oil here. Okay, load the crude oil market, not because we care about the charts. Actually, I need to use the one that is tradable. No, I cannot use the continuous contract. I need to use the right expiration date. Okay, which is the Z. Okay, the December. Oh, wait a minute. I used the wrong exchange. I used the Russian exchange here. So CL, crude oil, here we go. So Z, now I got it in the NYMEX, okay? A big difference here. So, okay, well, you need to be connected to an account, okay? So here I'm just gonna connect to TradeStation, okay? Via TradingView. So I'll connect to demo or live is the same. So I will input my username and password. Okay, so I can get real-time data from the exchange. So now, interesting. It's not, I don't understand why I'm getting that error message. Okay, so I will not be able to demonstrate this. I'm not sure why. Maybe it's a weekend maintenance thing or something. But anyway, I am, as you can see on the bottom here, I am connected real time with TradeStation. Actually, if I, oh yes, I know what it is. So CL crude oil. Yeah, so now I got TradeStation tick here on the top. Okay, so that should work if I click TradeStation now. Okay, interesting. So let me try one more time, guys, because I mean I used that before, so it's I'm not sure why it's not allowing me to do this. Okay, so guys, I cannot show you what I wanted to show you, but basically at other times I guess this should work as it did before for myself, and then you would be able, like I did with Forex, you would be able to input the amount of money that you want to risk, and it would tell you the position size. Okay, and then you would just adjust the amount of contracts. Okay, I guess that you hear in the background the Indian celebrations for the Indian New Year in the background, so you know, happy times out there in the sky. So this would allow you to calculate the size and be able to adjust the quantity of contracts. Okay, good. What else? So now that you got the size, okay, you would calculate the safety target. So if you recall earlier when I was drawing the UFO here, okay, I was pretending that the top of the UFO was 56.63 and the bottom 56.55. So we said we're gonna use an entry at 63 and the stop will be 54, right below, one tick below, because this is one tick at a time. So this will be the location for the stop, 54, okay? So if you think about it, from 63 to 54, we got 9 ticks of risk. So if you got 9 ticks of risk, given the fact that your entry is 63, if you add 9, okay, 009, that's 9 ticks, that would place your safety target to be 56.72. So in other words, the final plan for this trade would be final target is a 58.46 that we saw earlier, finding that very far away UFO in the common time frame. Safety target, that would be 56.72. Long entry, that would be 56.63, and the stop loss, that would be 56.54. That would be the plan for the trade, and you will be ready to go. Okay. Again, I had to make up the UFO to make up the UFO here just to save a little bit of time. We're gonna be doing that during market hours millions of times. So you know, we'll certainly see many opportunities where I don't make up market data by just doing manual drawing. Okay, which I'm not that good at that either. But hopefully for this practice and understanding the flowchart and the application, it's good enough. Okay, so I'm gonna read your comments before we do it with stocks, and then we'll be done for today. Okay, so yes, I see your message, Prabhakara. Yes, and what's important when you watch the recording not only is that you see the changes, but you listen carefully to the reasons for the changes. Okay, that's going to be very, very important for you. Okay, for everybody. Why you, Jose? I only use TradingView, don't have TradeStation. Hope all the strategy in flowchart are applicable as well. Yes, of course, but for you to be able to apply whatever you apply, you need real-time data feeds. Okay, real-time data feeds, and with a market, with products that are traded in an exchange. Such as stocks or futures, the exchange doesn't give anyone the market data for free. So some brokers may give it to you for free, like TradeStation. Okay, so that's why I connected my TradingView to TradeStation. So that way I get real-time market data for free. Okay, because if I don't do that, okay, let me show you this. So more. So I'm looking at the TradingView website. Okay, this has nothing to do with Trade with UFOs or our company. This is just pure TradingView. So when you look down in TradingView, all the way down, okay, here it says available markets, okay, and here you got a button. Oh, sorry guys. Here we go. Here you got a button to subscribe to real-time markets. Okay, so notice how worldwide markets such as currencies, Forex, CFDs, cryptocurrencies, all of this is real time and is free. Why? Because all those products are worldwide. They are not centralized. But the moment you get into centralized exchanges, okay, you got free delay data, okay, which is only 10 minutes, okay, which is okay for most traders, okay, not for intraday, obviously, but for most traders is okay. But then if you want real time, then you need to pay a little bit of money to be able to get real-time data, okay? This is for stocks, it could be for indices, it could be for futures. For example, if you want the global E-mini, okay? I mean, that's all the markets, that's 110, okay? If you only want the E-mini, it's 45 only. So it's quite reasonable, okay? But again, if you want it to be even more reasonable, okay? Just open an account with TradeStation. TradeStation will not charge you anything in a monthly basis, but they will give you real-time market data. And then what you could do is, as I did myself, you can connect to TradeStation, okay? You can connect to TradeStation, and then, you know, you would basically benefit from the real-time market data. And also, actually, by the way, you could execute from here as well. Let me do it again, because earlier, for whatever reason, it didn't work. Maybe I need to be live, so let me reconnect. I'll use another username as well, just in case. I have many accounts, guys, so I'll do this one. Okay. I think maybe it's because I need to be... Okay, so, yeah, so I'm getting an error message here, which really, I think it's probably a maintenance thing, because certainly this account is an account I used to trade futures, so this should work with no problem. I'll try one more time. CL, Crude Oil, Futures December, NYMEX, TradeStation is marked. Okay, so it's not loading here, and I'm not sure why is this the case at this moment in time. Okay, but this should work. So anyway, yeah. In any case, you get real-time market data by doing that. Okay, and you don't need to pay anything, nor to TradeStation, nor to TradingView. Okay, so this is your workaround. Okay, knowing that most brokers around the world, most charting software around the world, they charge for real-time market data for centralized products. Okay. So why you keep that in mind? Okay, of course, if you trade Forex, you know, no need to think about it because it's not centralized. But every time you deal with you deal with exchanges, that is the case. Yeah, and the scanner is free. Yeah, both with TradingView and also TradeStation. Yes. Yeah, cool. Okay, so hey, let's do the last one. Stocks. So one more practice. Okay, we have a list of stocks here that meet our rules. Okay, so for example, American Airlines. Okay, so let's see what happens with that stock. Okay, so let's begin. Flowchart. Using common time frame. Let's check the climate. So what happens with the climate? Well, yes, it's a beautiful climate. Okay, but we already got 12 candles into a 4.12 candle climate. So we are too late. Okay, we are way too late to enter that market. Okay, so no, and therefore we go back to the beginning with a different stock. So what about AFL? So AFL, what do we have? Okay, we have one blue dot, thick, meaning it's confirmed, and it's 1 out of 551. So certainly from a climate point of view, this makes sense. Okay, this makes sense. So what is the next step? Well, the next step would be to look for the target. So activate AutoUFO in the daily time frame. Okay, so look for the target. Same common time frame, which is daily in this case. Activate AutoUFO, okay, and go find a target. And here's your target. So the target for AFL would be 54.56. That would be the target. Okay, again, right here, which happens to be the bottom part of this UFO. That's your target, 54.56, right there. Okay, so okay, so we got it. We got the climate, we got the target. So what is next? Mix common time frame and edge time frames to find a valid entry. Okay, so the common time frame tells me ideally I want the entry to be 52.65. So 52.65. Do we have any UFO? Yes, we do, because 52.65 is more or less here, right? So we have that UFO, okay, that UFO right there, where the top of this UFO is, let me click and hold, 52.63, close enough to 52.55. So yes, we have a valid entry. Okay, so keep going. Using the edge time frame, define your stop loss. Well, simple. The bottom part of this UFO is 52.51, so the stop will be 52.50. Okay? If you use shares, a different story will be to use options, but this is not the subject for today. Okay, so I will not talk about options, because you have seen that with options, okay, if you do follow the longer term sessions, you could actually execute without the use of stops, which gives you more flexibility to be wrong, especially given the fact that stocks are a fragile asset that depends on sectors, on indexes, etc., etc. But if you were to trade the stock by itself, then your stop needs to be 52.50. Okay, that would be the location for the stop. So then you would just quantify the risk and define the size. So let's say your trade begins at 52.65 and your stop is 52.50, so you are risking 15 cents. Knowing that you're risking 15 cents, let's say you want to risk $50 per trade, just to use the same number as before, even though it's quite low. So let's say $50 is what you want to risk, and you know every time you take the trade per share, you're risking 15 cents. So this allows you to buy 333 shares. So your position size would be 333. Okay, that would be your size. Okay, what else? Safety target. Well, you know your risk is 15. Okay, your risk is 15. Okay, you also know your entry is 52.65. So if you add 15 to 52.65, that pushes that safety target up to 52.8. Okay, and this now puts you in a position where you are ready to execute. So what would you execute? Okay, what you would execute is a trade with a final target located at 54.56, which is the UFO we found earlier on the daily time frame. That's your final target. What else? We also have a safety target much below, okay, which is going to be located at 52.80. Okay, the long entry would be below, which is located at 52.65. Again, the difference between 62.65 and 52.65 and 52.80 is 15 cents, which is also the same distance from the entry to the stop loss, that therefore would be located at 52.50. So you are risking 15 cents, you are making 15 cents, stop loss, safety target, and exposing ourselves free of risk to the final target located at 54.56. This is the process. This is what I wanted to review and discuss with you today. So please, my friends, go ahead and give me a little bit of feedback of how today's session went. Is everybody okay? Do I have anyone in the group that is confused? How is it going? Please let me know, so I can clarify if there is any remaining question, or I can just set you free for today and go back to enjoy Sunday. But again, give me some feedback first. Even if the feedback is it's all good, please let me know it's all good, so that will be good for me to know it's all good. Please go ahead. Cool. And I do envision for the ones of you that have been part of the sessions for a while, that today's session was very simple to follow, almost or without almost, a little bit in the boring side. Okay, I get it, but at the same time, it's very important for the group overall, and also the changes that we made make sense. Okay, especially given your requests and comments and the emails. So it's important again that we are in the same page, because we're gonna be doing all of these during the weekdays. Okay, so it's very, very important. So you're with me, Thomas. It's all good, very good. Thomas, I'm glad to hear from you that all is good, because earlier you made a comment that you are new to the process. So if it's all good, that's perfect, because that's what you need to be able to now put some practice and get that process from a new process to become the second nature in how you do your trades. Okay, so perfect. Dennis, what you do consider optional about the time stop? Yes, well, I didn't talk about it today because we talked about this in prior sessions, but that's a very important question, Dennis. So let me spend a little bit of time talking about the time stop that is optional, as well as too far too fast, and also the UFO trailing methodology. Okay, all of those are optional. Okay, so optional means what? Means that if you don't use them, it's okay. That's the first thing to keep in mind. But the fact that they're there is because they also produce some benefits. Of course, if they only produce benefits and no downside, then they will not be optional. There will be a rule. Okay, so we need to understand the benefits and the downside for you to decide if you want to use them or not. Okay, so the time stop is a stop by which, when you reach X amount of candles in the edge time frame where you haven't reached your safety target yet, then you are supposed to close this trade and get out and give up on the trade, because you gave some time for the trade to work out and it's not working out. So probably a climate change is about to happen, so get out. That's the rationale behind the time stop. The benefit is that you will avoid losses. The benefit is that you will collect more often small profits, which is not amazing, but it does help with build confidence. The downside is that sometimes you will get out and then you will have this amazing move and you will miss it. Okay? So again, to summarize it, time stops add safety, but sometimes they will avoid a major profit to be collected. So I would say when you are very experienced, you may pass on time stops, or you may give yourself a very generous rule on how to use time stops. But when you are newer to trading, and this is what I'm doing in the sessions, precisely because some of you are newer to trading, to keep you safe, I am using time stops. I know that sometimes I will miss a better trade, but also many times we are very glad that the time stop rule triggers, because we exit the trades for no pain or small profit or little pain or break even instead of a full loss. Okay, that's the time stop. So you will see me use that during the sessions live. So next time I do it, if you have any question, Dennis, ask me about it, and I will re-explain everything and the time frame I use and everything. Okay. Too far, too fast exit, which is the next optional exit. Again, why is optional? Because it has benefits, but it has a downside. Okay. So it's all about things that are sustainable versus things that are not sustainable. When a market is moving too fast towards the target, but is not creating UFOs along the way, okay, that is looking like it's not going to be sustainable. And it's not only because the move is fast, which that too, but it's also because you don't have evidence of new pockets of orders being added to the market. And therefore, if the market was to change direction, it may just change direction and never come back. In other words, if a market goes up like that and gives you a UFO, and goes like that and gives you a UFO, and goes like that and gives you a UFO, okay, and goes like that, if that market wants to fall, the moment it gets to that UFO, it's likely to bounce. And if it doesn't bounce, or bounce only a little, when it goes to the next one, it's likely to bounce. And if it doesn't bounce, or bounces only a little, when it goes to the next UFO, it's likely to bounce, and hopefully it will. Okay, so you got things to defend yourself with those three UFOs to avoid the market to fall. But the problem is not that. The problem is when the market just goes straight up or straight down without those UFOs. Well, now if the market goes down, there is nothing to stop it, and it may go back down all the way to the beginning very quick. So you see your account with a very nice profit, and next thing you know, 2 minutes later, the whole profit is gone. Okay, this is when we add the too far, too fast rule, where we start trailing stop. Okay, based on a mathematical calculation that we do in our head, which I'm gonna flash on the screen, so you can take a screenshot or make a note. Okay, so let me load the notes. Okay, let me find it. Where are you? Where are you? Where are you? Where are you? I think we're close now. Yes, too far, too fast. Okay, so here are the rules. You calculate in your head how much is the profit, add your safety target, and you divide it by 2. That's your reference. Okay, and now every time the market moves without UFOs and produces that profit, okay, so you are ready to move your stop by that amount. Okay, this will normally allow you to lock on some profits. If the market was to turn around aggressively and goes back all the way to the origin, well, guess what? You exit the trade for at least a little bit of a profit. Last one, UFO trailing. Okay, so UFO trailing is what we like the best, isn't it? So you enter here, the final target is up there, okay, or vice versa. If it's a short, the market starts moving up, gives you a UFO, right here, gives you a UFO, and then keeps moving higher and gives you another UFO, keeps moving higher, gives you a UFO. That, as we said before, is much more sustainable, and it is increasing the probability that someday you do get to the final target. Okay, but at the same time, at the very beginning of everything, you got your stop down below. Okay, this is your stop. So what doesn't make sense is to leave the stop there. Once new on-field orders appear on the chart, it actually does make a lot of sense to take your stop and move it, and move it, and move it below those UFOs that just form, okay? So you are doing a trailing stop, okay, or trailing exit, okay, based on UFOs that form as price travels to the final target. Hopefully you will get to the final target, but if you didn't and this turns around and stops you out, at least you maximize the amount of profits to be made from that exit to where your entry was. You know, you made it as great as possible, okay? So that's what it is. Okay, what else? Dennis, in order to use radar screen in TradeStation, they will charge for that on a monthly basis. And the scanner is free, however. No, that's not the case at all. Okay, this was like that years ago. And if your account is using that type of commission model, you need to call TradeStation. Okay, you need to call TradeStation and talk to them and tell them to move you into the current commission model where there is no charges for anything. So your data feeds are free, the platform is free, radar screen is free, scanner is free, Portfolio Maestro is free. Okay, so call TradeStation, okay, and ask them to change you. And if you have any problem with that, Dennis, or you were to talk to the wrong person, because sometimes it happens with the call centers, send us an email, okay, and we'll share with you the right contact information with our own representative, so you know, they can help you directly as well, okay? But you don't need to pay for that any longer. Yes. Prohakara, your dedication to trainers is well appreciated. I like your approach of trading. Thank you very much. To be honest, I love it. Okay, I love it. It just makes my day to get together with you guys and spend some time talking about one of my passions, which is trading. Okay, so it's actually my pleasure. Okay, but I really appreciate it. Your words are so sweet. Thanks for that. Thomas, can UFO be used in a Renko chart? Yes, the short answer is yes, but at the same time, I would also add, make sure you look at the stats so you know what to expect from it, okay? Because my greater expertise is you applying it to either bar charts or candlestick charts. This is where most of my experience comes from. Certainly, AutoUFOs has a dynamic algo built in, and it does adapt to a lot of market data depending on how the market data is being given. So with Renko charts, it should do an okay job, but I would not be able to tell you how okay that job is. Okay, so look at the UFO performance stats to at least get some sort of a measurement, and then I would suggest that you paper trade it for a while before you start trading live. But it should work. Okay, just like if you apply it to range charts or other types of charts, I've seen good results. Okay, even though. And I guess it's just because of habits, okay? But my preference is to use it with bar charts or candlestick charts. And I have to say, my favorite time frames are volumes and ticks more than time frames based on time, okay? That I would say, okay? But anyway, everybody, we are done for today. In the end, I was planning to make the session a little shorter, so I didn't give you a break. In the end, it ended up being a pretty long session. So guys, you are amazing, sticking with me here with no complaint on the chat box, requiring a break. I guess that, you know, our passion for the markets is what drives us, and it's unbelievable, and I love it. But at the same time, make sure next time, if you see I go too far, you stop me there, okay? You know that when I do the weekly sessions, short term and longer term, my focus is to find as many trades as I can. I try to move quick in the charts. You also know that when I do the sharpening sessions, my focus is to not to be in a rush at all. So I do talk fast because I guess that's me, but I really have no rush to explain what I need to explain. I take my time. And this, in one hand, hopefully is helpful. In the other hand, is dangerous for you guys, because I may end up not giving you a break. Okay, so make sure you claim your break next time. And anyway, in any case, again, super pleasure to be here today. Okay. You have nothing with the scanner, Ahmad. So here's a little trick. I didn't change the scanner, But here is something that, depending on where you are in the world and the latency with your internet connection, I found that creates significant changes. You right click on the scanner, you go for settings, you go for preferences, okay? And when you get there, you just take that timeout duration and move it all the way to the right for the higher timeout duration, which is 2 minutes. When you do that, I am very, very positive you will get all the results you're supposed to get. Okay, so do that, and that will fix your problem. Frank, thanks. Jose came in very late. We'll watch the recording. Yes, please do so, because there is relevant information, especially at the beginning, Frank. But it's very nice to see you, my friend. And by the way, beautiful trades that you have been posting in recent times. Really love it. Okay, so keep up the good work, my friend. Wonderful. See you soon, everyone. See you during the weekdays in the trading sessions. Okay, take care, everybody. Bye bye. See you then.